Hello, everyone, and welcome to The Buck Stops Here. I'm Catherine Murray. Well, I think as many of you know, my program does air on Sunday mornings, and I do pre-tape the program. Today is Thursday, April the 7th, and we will hear from our finance minister at 4 o'clock today about the 2022 budget. She will be delivering it at 4 o'clock today. It is expected to have three main themes: climate change, housing affordability, as well as defense. And there does seem to be a bit of cautious optimism surrounding the Canadian economy. At the same time, we are facing significant inflationary pressures, supply chain issues, and labor shortages, let alone, of course, the geopolitical tensions that we are all seeing day to day. To weigh in on the budget, the Canadian and global economies, the energy sector, and where we are all heading is Murray Mullen, the Mullen Group chairman and CEO. And of course, the Mullen Group provides trucking and logistics services in Canada and the United States, and is recognized as the largest provider of specialized transportation and related services to the oil and nat gas sector. Murray, welcome, and thank you so much for being with us.
Great to be here, Catherine. Good to see you again.
Thank you. You and I have spoken for so many years now, and I always love getting your perspective in terms of the state of affairs. Why don't we start with Canada first? We often start globally, but let's talk a little bit about how you see Canada right now as we head into the 2022 budget from Finance Minister Freeland today.
Well, it's always difficult to be on a program out with when you have the finance minister on and try and be relevant with that, but I'll give you my best take on what I'm seeing right now, and maybe our perspective of how we're looking at how things might change. First and foremost, I'd say, the economy is pretty strong, pretty robust. We all know that post-COVID, that, there was a very quick rebound in the economic activity. And that was probably driven a lot by fiscal and monetary policy. But I think now we're starting to feel the pressures of all those policies. And that's what I'd call a cost surge. Some call it inflationary. I would tell you it's more than inflation. It is now a cost surge. And I think that's one of the biggest issues that everybody has to deal with today. I don't think that the cost surge can continue much longer, to be honest with you, without causing a whole bunch of undue harm. But to the average person, inflation is a killer. And that's just simply a factor of too much money and too much demand chasing too few of goods. So that's what we got going on right now. The labor markets, as you just highlighted, are very, very tight. And I don't know how you can grow your business if you can't access good labor, if you can't access the labor. So it seems to me like we're in a pretty good shape, but it's got to cool a bit to get inflation under control. And that's what all the central bankers and up around the world are going to try and delicately handle this situation of slow it down without hurting the economy too much. But just my take on it.
No, thank you. There's a lot to pick up on there. And certainly that's the challenge for central bankers around the world. And it's so interesting to see the Bank of Japan have much more of a stimulus focus still, and perhaps even a rate cut out of China. And at the same time, we've got the U.S. Federal Reserve tightening on a tightening path. We've got the BOC next week. As you say, it's not just inflation, it's cost surging. Yes. Describe what that means. What exactly are you seeing? Because I think a lot of people at home say, yeah, my costs are surging, but the data is telling me it's only, single digits.
Yeah, so let's look at maybe the three surges that we see. Number one, I would say, look at housing, look at real estate. This is not up by 5%. To the average person that goes into the food stores, that's not up by 5%. Fuel has doubled in 1 year. Price of crude oil, price of minerals, metals, everything has doubled virtually in a year, sometimes more than that. So this is not inflation. Inflation is in a tight range, and that's what they try and navigate towards. But the cat's out of the bag. You've now got this massive cost surge going on, and the supply chain is tight. Some of it's supply chain issues, but I think it's more than that now. It's tremendous wage push, along with commodity push and whatever. Those are not easy issues to resolve. And I don't think you can do it through taxation. I think the only way is either we have to add supply into the system or you're going to have to reduce demand.
Murray, it's interesting. You mentioned that it's not that difficult in terms of what the equation is, supply versus demand. How difficult is it of a time period for federal governments, Bank of Canada to navigate this, and what does it mean for us at home?
Well, look, I follow this, and I'm a cheap economist because that's what I took when I went to university, is economics and finance. So I understand supply and demand and prices set on the interaction of the two. In terms of monetary policy, it seemed to me that you always had a governor of the Bank of Canada, or the governor that is in the central bank. And that's what a governor is to manage the flow of money. Well, they went on a binge in 2020 with COVID, and they just flooded the system with money. And that was an experiment. It's called quantitative easing, whatever you want to call it. So they've put all that money in the system. That money is sloshing around. Everybody knows it, but they're the ones that created it.
Yeah.
Now, the federal government, through fiscal policy, well, I don't know of a government that doesn't like to spend money, because that's how you get elected. So the governor was supposed to be there to be a governor, not to let it get out of control. So we've had both of them just flood money into the system, and the average person is the one that pays the price. If you own assets, if you own real estate, if you own stocks, bonds, Bitcoin, whatever, well, you've done fantastic. I'm talking about the average person that's on a fixed income, that doesn't own that asset, or somebody that's new getting in, that's going to really be under tremendous pressure because of inflationary pressures. What we've done in our business is I have no choice but to raise prices to our customers because the cost surge. We get every day we get a new pricing increase from our suppliers, whether it's for new equipment, whether it's for fuel, whether it's for our energy. And I've got a tremendous push coming from our employees, which I fully understand, is because they are pressured by inflation. So it is really complicated right now. We have no choice but to raise prices, and that's what's called inflation. And they're going to have to get their heads around this. And it is not going to be easy, Catherine, because they flooded the system with too much money in COVID times of March 2 years ago.
Yeah.
They overcooked it, and now they're going to have to uncook it. That's the way it is. Try and uncook a bird. That's tough.
Right. It doesn't, I don't know how it happens.
I don't know how to do it.
It's interesting when you say that you're getting price increases from your suppliers on a day-to-day basis. I mean, are we talking 1%, 5%? Like, give us a bit of a sense in terms of to what degree.
Well, generally speaking, most prices went up, and we tried to do the same thing. We tried to live within, a 4.5%, kind of be reasonable. Catherine, that doesn't do it anymore. You will get from our tire manufacturers, here's your price, 12%. Our equipment manufacturers, this diesel fuel, as I said, which is a byproduct of crude oil, that's up 50% year over year. So now you're talking about quantum numbers.
Yeah.
And then you've got another cost push that's happening, which is, once inflation gets in, then prices you can pass on because it's tight. So you got cost push, but you also got market push because supply is demand is exceeding supply at the moment.
But Murray, do you not think then that what you're seeing and experiencing in terms of the pricing pressures, the cost pressures, will in itself slow the economy down? I mean, that's, I think, what we're kind of witnessing in the United States. There's a lot of commentary from economists, strategists saying that, hold on, everybody, the consumer is absolutely slowing down. Some of the economic data, particularly in China, slowing down this week. So are we not at risk that the central banks, whether Canada or the United States, are going to have a significant policy misstep? They're actually going to increase rates at the wrong time, finally, but at the wrong time?
Yeah, I mean, clearly, inflation will slow the economy down eventually, because the average consumer is paying too much to food, fuel, and housing. So yes, they have very little discretionary item left. That's going to slow it down, but I don't think it's enough, Catherine. There's too much money in the system. They're going to have to withdraw that quantitative easing back out. And when you do that, that's going to impact asset prices, I suspect. And then that combination will get us back to a normal. Inflation is not 4%. So
Right.
it's a lot higher than that. So they're going to have to take some pretty good steps in our view, so that we have a sustainable economy going forward.
Okay. We'll take a quick break. I'll pick it up right after the break. Murray, I wanted to get your thought there as we were just heading into break in terms of how difficult this is, to really navigate and make sure that we have a soft landing.
Oh, I don't think they'll be able to, if you want my honest opinion. I think that we've had a massive flow since COVID hit, and we were having an economic rebound that was going to happen post-COVID with or without the central banks, but they cooked it, as I said, and I talked about earlier, they cooked it a little bit too much. I don't know how they're going to navigate a soft landing. I hope they can. We all do, but I think we need to be prepared. It's kind of like if I go on a binge, I got to slow down a little bit. You got to just slow it down a bit so we can get control of these cost surges. At the same time, Catherine, we're going to have to add infrastructure, and we're going to have to add capacity so that we can handle more demand as the middle class gets more money, et cetera. So it's a dual edge. I think we're going to have to slow the consumer part of the economy down, but we're going to have to keep investing so that we can add supply.
Right.
Not just kill the demand. We're going to have to add supply. That's the delicate balance that I think we're going to have.
And what's interesting, though, that's perhaps where the focus should be in terms of building that infrastructure, really, breaking down those trade barriers, interprovincial trade barriers to get the flow of goods going better than they have been. That's been a critique for so many years right now. But at the same time, we are hearing that, of course, the NDP and the Liberal government want to continue spending, particularly on pharmacare and dental for all, which makes sense, but that's just adding to the debt. And I don't know if it's focused in the right areas for right now. What do you think?
I think, for those people that need that's focused on the right area. I mean, that's what politics is about. But you got to have a dual strategy, is that how do we make sure that we can have a well-functioning economy? You have to have infrastructure so that we're efficient. And I don't know whether we've got enough focus on that, to be honest with you. We got lots of focus on helping people out, which is, that's difficult to argue with.
Yep.
The same side of the coin, we've got to control pricing in the economy. If all we do is throw money at it, that's not solving the problem. We have to add supply, and you have to be able to have an effective infrastructure. Let's take oil and natural gas as an example.
Yes.
If we're not adding supply of crude oil and natural gas into the market, but consumers still keep consuming, it's not complicated. Price will remain elevated for a long period of time, folks, because in effect, the federal government has killed investment in oil and gas in Canada.
Right.
And but you didn't kill demand from the consumer. The consumer didn't quite listen to what you were saying. They're still consuming. And
right.
So we've got a price has to go up.
Yeah. And Murray, you and I have been talking for years, particularly during the era of the government vilifying the oil and gas sector here in Canada, yet we had the cleanest and perhaps most democratic oil in the world versus importing it from despotic leaders out of the East Coast. And so many of the businesses suffered and had to pivot, as I think you did, and did it so well. And now there seems to be a recognition amongst the federal government that, oh, wait a second, we actually still do use oil. How do you respond to those dynamics?
Well, look, we've got lots of oil for Canadians. What we don't have is oil if you want to actually help the rest of the world. And we are now not, we're not really a good player in that right now. Because Mr. Trudeau, I haven't agreed with a lot of the policies, but I did agree with what he said just not that long ago, which is when he told the Europeans, well, actually, we can't help you. We don't have the infrastructure. Well, I know that. You canceled all the projects. So
Right.
yes, we don't have the infrastructure. So we cannot help with oil and natural gas right now. Other countries are doing it. If you take a look at, for example, LNG, the United States is going full on to supply Europe with natural gas. We have no ability to get natural gas to Europe. You need an LNG facility, probably on the East Coast, to be able to help Europe at a time of need. And we're late in that game. So yes, you're right. We can't help them. We cannot help Europe with their situation right now. And it is going to be very, very difficult because crude oil and natural gas are a world price, and Canada's not doing its part to help keep prices down.
Murray, I want to pick it up on your last point, which is, my goodness, we all know we have the resources here in Canada, but we cannot help the rest of the world during this very difficult time for Ukraine because we have had so many delays in infrastructure building here in Canada because of protests, amongst many other aspects. A government who really doesn't want to support our energy industry. How do you see that playing out then going forward? And what do Canadians need to know about it?
Well, I think you're spot on this. Is that, look, I think it all starts with what's the tone at the top, and the tone at the top from a federal government perspective, particularly with the Liberal government and whatever, is that we are not going to be world players in the natural resource world. We're going to be doing other things. So it starts at the top, and then it becomes very difficult to get projects completed if the tone at the top isn't, look, we've got to get it done. It's a strategy for Canada. The strategy for Canada has been, we're not doing any more. And you can argue for or against that, but that's the reality of the situation. So I don't think we can help the world at a time when the world needs help to get off of Russian oil. If you want to isolate Mr. Putin and Russia, which has massive resources, the same as Canada. We're kind of the same. Well, their natural resources were fueling kind of a bad dude.
Yeah.
And Europe was beholden to Russian oil, natural gas, minerals, etc. Well, they need to get off it, and we can't help them. So it's going to be very, very complicated. And I don't know how it's all going to play out, but I suspect that we're not going to be able to grow our resource side. I suspect that oil and natural gas companies are going to do fantastic because I think commodity prices are going to be through the roof because we can't add any supply.
Do you see the commodity prices going higher then? You said for, the previous segment for Canadians to really prepare.
I'll tell you what scares me is the markets are extremely tight right now. You only need one more cuckoo like a Putin to do one stupid thing, and then we've got a massive problem. There are no insurance policies right now, Catherine, on the supply side. So if you have one more disruption on supply, then you're going to have a massive problem, and there are no relief valves at the moment. You can't just turn the tap on.
Right. And we've been talking about that.
That concerns me.
People have been focused on the energy industry, like a Rafa Tamasian, who I speak with regularly. I mean, we've been focused on that for years, the lack of supply, the supply constraints, lack of investment. And here we stand at high oil prices. In some ways, though, Murray, it would benefit the Canadian economy. But at the same time, we've got higher input costs, which I think is how you see it for your own company.
Look, I'm 100% for renewables. I want everybody to understand that. I think we need more than just oil and gas, but you can't get off of it quickly. So I would advocate, let's have a dual strategy, a short-term one. Let's add oil and gas because that, we've got to support the industry there. With a long-term strategy is let's continue to add and pivot towards renewables and others. But everybody talks about renewables, but they don't talk about what's the plan.
Right.
And can you do it, in a cost-effective manner? Technology needs to catch up to the rhetoric. And if it does, and the the people that are masters of physics and chemistry and technology can help us unlock that key, I'm all for that. Until you get that, we got to have an honest discussion that the consumer will pay much higher prices if they keep consuming. And
yeah.
that's my point.
And Murray, as we wrap it up here, it's amazing because we've got the budget, and I don't know that we're going to hear anything about the realities of the situation that you and I have just discussed today, because the focus it's going to be on housing affordability, and maybe they'll prevent foreigners from purchasing residential homes for a couple of years. Maybe that'll help. But we've still got the cost of the carbon tax that's going through. They also apparently might be taxing the large banks 3% of profit over $1 billion. Doesn't seem like any of those comments are solutions to what we've talked about today and what Canadians are going to feel on a day-to-day basis. I've got 20 seconds left for your closing thoughts on my last point there.
Well, I would say to you, I agree with you. No taxation will bring costs down to the average person. The government needs money because they keep giving it away on the other side.
Yeah.
And it's good investments, but we have to invest in infrastructure. That's my point.
Okay, we'll leave it there. Murray, great to see you. Thank you.
Always a pleasure. Thanks, Catherine. Take care.
Thank you.